Hello and welcome to another Watch Pro original interview. And this morning I'm joined from Berlin, usually in Berlin, so we'll talk about that in a second, by Philipp Man. He's the chief executive of Chronext, one of the world's leading trading platforms for vintage, pre-owned, and in some cases new watches. We'll get into that as well. So without further ado, I'll say good morning to you, Philipp. How are you doing?
Good morning. I'm very well, thank you. How are you?
Yeah, good, thank you. Why are you not in the office?
Well, I guess as many others, I'm trying to avoid large places with a lot of people, and so I would say 95% of our staff are working from home. I'm working from a friend's flat, and yeah, trying to be as productive as I can. And I must say, I'm surprised. But I would say my productivity levels have actually even increased at home.
Yeah, I know what you mean. You suddenly get so much time back without people interrupting you the whole.
Exactly. I'm usually actually the person interrupting everyone, but I don't get the chance to do that anymore, so I have to work.
Yeah. And Germany's been the pin-up boy of this awful crisis. I don't want to belittle it in any way, but Germany's authorities seem to have dealt with it better than all other European Union countries. What's the mood in the country now? Because you're a good few weeks out of lockdown now, aren't you?
I mean, you can go to gyms, you can go to restaurants, you can even go to bars. People are doing vacations within Germany on some of the islands that there are. Eastern Germany. Yeah, I mean, except for the supermarkets and gas stations where you have to wear masks, you don't really see such a big difference.
And if you go to a bar, have you been to a bar or restaurant? I mean, is it all social distancing, or is it all outdoors? How is it?
I mean, I haven't been to a bar. I've been to a couple of restaurants, and there's a few where clearly the atmosphere of pre-corona is different. And then there's a few where you're actually a bit surprised that there can't be 1.5 or 2 meters of distance that they need to keep, and it's maximum 50 people, but it seems to me like 250 people. But yeah, I think in the grand scheme of things, I think the average German is dealing with it quite sensibly. I've been to Switzerland, where I live, a couple of times. It's even more normal there. In Zurich, no one's wearing masks. I would say 150 people. So. Yeah, the situation here is pretty good in not a great place, and I think the German government and also the Swiss government, where our main offices are, is dealing with it extremely well. And yeah, I guess we couldn't be happier to be in those countries.
And does it feel like retail is picking up? I had a conversation with our Watch Pro editor in Germany, Antje, and she said in the first week or so after stores were allowed to open, there's probably only 50% at best in terms of the level of business.
If you look at kind of retail, whether that's pre-owned retailers or authorized retailers, from what we hear, and again, that's just anecdotal evidence, it's not great, and it's significantly pre-corona levels, sorry, below corona levels, and the thing that also hurts a lot is that the whole travel guide Chinese tourists engagement is near zero or at zero. We can say, I mean, for us as ecom, the first week of March, second week of March, we felt it quite a bit. Then it normalized in March, April, May. We're very strong. June is now completely on track to pre-corona levels. So we're quite optimistic that this again will be our strongest year by far. And in terms of profitability and also marketing efficiency, we are seeing our best months that we have in company history right now. So we are very optimistic, and we couldn't really tell in many ways that's an epidemic, other than I'm working at home and many others are doing the same.
I mean, it certainly appears to, well, obviously brick and mortar has been completely shut down in almost the entire civilized, developed world. E-commerce has certainly been a beneficiary, but I mean, there must be a drop-off in demand when the world is facing a crisis like this. Are they really thinking about luxury watches?
I mean, I think about luxury watches all the time, but I guess that's not representative. The truth is that yes, I think you will see contraction overall in the market. It's going to take time to recover to get back to normal levels. Obviously, when people are more at home, more on the mobile phones, on Instagram, on their computers, iPads, etc., the chance that if they do make that purchase, it will be online is much higher. And I think something that would have happened over the last 10 years is now accelerating in 24 months with this offline to online shift. I don't think everything will be online, but I think there will be a sustainable change in proportion. And we're clearly a net beneficiary of that. I think that, ultimately, if you look at the time that has passed since the last crisis, luxury watches have definitely been considered significantly more to be asset classes worth, storing or even appreciating in value. So even though there is a crisis, people are looking for ways to potentially hedge against inflation, are scared that stock markets are overheated again after the correction in March. And so we see a lot of customers buying products with us that they feel will preserve value. So, I can't say that, obviously nobody wished for that, for the current epidemic, including us. But I think we're making the best out of the situation. And of course, we had to adjust, and we felt it in March. And there are economies such as the UK where we see disproportionately more decrease in demand, but then there are other markets that are outperforming pre-corona, such as Germany. So we are, I want to say, in a very good position.
Any explanation for why the UK has underperformed? Is it just because the virus has actually been worse here than in markets like Germany?
I think it's a combination of factors. I think that in the UK there was more uncertainty at the beginning, kind of going to the Swedish tactic of not really doing that much against the virus. Then when we really saw a drop off in demand was when the PM Boris Johnson had to go to hospital. I think that's when people realized, wow, it's real and we might not be dealing with it correctly. And also that the lockdown situation is more intense, and it seems to be a more epidemic-like atmosphere in the UK. In Germany, in Switzerland, the weather's been better than I remember, and I think it's been across Switzerland and Germany, many parts of the country is like that. And so people don't have this gloomy attitude. And I guess also what you can say in Germany is, I must say, and also Switzerland, but Germany even more so, is that the government has helped businesses tremendously fast. Whether you're a freelancer, whether you're an SME, or whether you're a large corporation like Lufthansa or Adidas, most companies have been fairly quick to reach credit. Even startups have been able to reach credit. Not all of them eligible. VAT is being decreased from July. Social security payments can be paid later. Furlough is extremely quick and very competently done. I think the German government has done a tremendous job, as the Swiss government. The Swiss government gave loans to SMEs of €500,000 in March. A friend of mine applied for it at 9:30 in the morning. At 1 p.m. in the afternoon, the money was in his bank account. So I think both these countries did a tremendous job in managing that. And I think the overall clientele that would buy a watch reflects that mood.
Yes, that is interesting. Boris Johnson can actually negatively affect the economy just by getting sick.
I mean, I didn't say that. I think I just say there was a correlation.
I had a feeling he was going to screw up the economy somehow. I didn't realise it was quite going to be that way. When we last met, I came to your offices I think it was in January, February last year. You were talking then about a funding round, and that funding round was then secured, I think, in February this year.
Yes.
Right, 65 million euros.
Yeah. It was earlier, but we only announced in February. Yes.
Okay, great. Well, I mean, that's good timing, assuming that the money is still there.
Money is still there.
How are you going to put it to work?
I mean, for us, it's two things. We want to really accelerate and build out the profitability of the business, and that means investing heavily into everything that has to do with the customer. I think we've been extremely good in the past about procurement and supply. We've probably aggregated one of the largest, if not the largest, networks of suppliers globally for watches in the luxury space. Where we want to really focus now is everything that has to do with customer-facing interaction, how the consumer interacts with us, our site, and regardless whether that's the channel. So we're going to be investing heavily into that. And the second thing is really, and that's probably even bigger, is really driving pre-owned. We're investing a lot into our watch workshop. We're investing a great amount into stock. We think pre-owned stock is, with all the data that we have, something that is really worth owning, other than the marketplace business that we have more on the new side.
That's actually that's actually a little bit of a change from last year, because you were actually more keen on consignment. I read back over the interview, and you were saying that owning stock was actually the last thing you wanted to do, and you preferred the consignment model. So has your thinking changed on that over the past year or so?
No, not really. I mean, we still prefer consignment, but we're able to do both. And we want to consign even more than we buy, but we still want to buy a lot more than we've done in the past. And you know, we now have the ability to have a very large balance sheet of watches, and to be able to fulfill them next day into 130 countries. So that's really where we're investing. And I hope that, you know, pre-Christmas, if you look at our website, you'll probably see one of the largest pre-owned selections globally on there, that you'll find anywhere, in terms of standardized photography, you know, every single watch authenticated, every single watch refurbished by our own master watchmakers. I think you'll not see a lot of these selections somewhere else.
So how does the business break down between consignment business and the watches that you actually buy, refurbish, and sell?
I mean, that changes every month. So it's hard to give you a number there, but what I can say is that most customers do prefer to directly get their money, and to not wait while the watch is consigned. But there are months where it's pretty even. There are months where the changes are more significant.
And have you seen a significant uptick on the supply side since the pandemic? Because I would imagine that there would be at least a proportion of people, collectors, who are going to want to generate cash, liquidate their assets.
I mean, that's what we thought, and you know, we got one or two larger packages in from very important collectors, with, you know, limited editions that there's maybe 10 off, and you know, they have number one selling that for us. But in the grand scheme of things, people hold on to their watches, surprisingly. But I guess, you know, the reality is that, first of all, it takes time until people really feel the economic effects. I think we're going to see more in Q3, Q4. And more than that, you know, depending on the average buyer that buys a watch, you know, we recently did a survey. The disposable income of the average buyer that is with us is over, you know, 200K a year. That's kind of net disposable income. I would, you know, these people, I guess, and the numbers kind of confirm that, don't really sell their watch first, even if they need to sell assets. There are other liquid assets that they would sell first. So we haven't seen an influx of stock in the market. We have seen some distressed stock from retailers in the market, but also on low levels, to be honest. So at the moment, it's being relatively tight, and I think most brands are managing overstock or, you know, excess stock quite well. And there are brands such as Rolex, where you would have thought prices might fall due to Corona, but, you know, you have 2 months less of production, so chances are they're going to keep climbing.
Yeah, I was going to ask you about that. How prices have been affected, you know, across brands like Rolex and across other brands, perhaps Richard Mille, Patek Philippe, Audemars Piguet. These are the most heavily traded brands. Have you seen any interesting price fluctuations?
I mean, AP is being very, very stable. Rolex, for the most part, is being stable with appreciation. Patek mixed on the higher end pieces or on the very high pieces like in Nautilus, you see some decreases in prices, which however already started before Corona and are now being, I don't want to say catalyzed because it sounds very quick, but continue to move in that direction slowly. What we can say is on the high end pieces or on the very hyped up pieces, in the higher price segment, in the 50K plus segment, you see some movement downwards. But to be honest, the market is quite quiet, I would say. And I think you always call them unicorn watches, whether that's a Hulk or a Daytona. They're stable. They're not really moving. If they move, then they only move up. And I wouldn't have guessed that, to be honest, at the beginning of Corona. We did think that there will be a short-term correction down, but that still macro in the next 24 months price would move up. But no correction really so far.
But I mean, there's two different prices. There's the price you might pay me for a watch, and there's a price I might pay you for a watch as a consumer.
Yeah.
Are the buy prices from you as a trade buyer? Are they getting? Are you making lower offers on these unicorn watches?
Yeah, I mean, we did that for the first 2 weeks of March, and then it normalized again because we saw that demand was normalizing with us, and we always want to be fair to the customer, and also we know the customers have other chances to sell their watch, so we want that. We want it to be the place where they do it, and so that means that we need to be fair about pricing. And so at the moment, you will probably get the same price, potentially even higher than pre-Corona, for many of these unicorn pieces. I mean, if you look at the white steel Daytona, the Panda, no price change whatsoever. It's just climbing up and up and up. And so we reflect that when we buy.
You're pretty plugged into the matrix when it comes to what's going on in this Swiss watch industry. Have you heard any rumours about what Rolex and Patek might be doing in terms of new watches this year?
I mean, I probably hear the same rumours you do. I think, or probably you have better sources than I do. It's just speculation. I don't want to speculate it. I would hope, as a lover and a fan of Rolex, that they will release new products. But for them as a company, and I think for retailers across the globe, it's probably better if that doesn't happen, simply because there's a chance to retool and to produce more of the products that were in high demand before, not to overdo it, but to compensate for the 2 months and to help retailers out. I think the thing with the Swiss watch industry is, and whether that's Switzerland or globally, everyone in it is together, and it's, I don't want to call it a family because it's cheesy, but it is ultimately a family. All players of the markets, even players that don't necessarily officially like themselves. And I think for the ecosystem, it's better if the new releases potentially go to next year. But as a fan, I would be happy if they come this year. But I think for the retailer, it would be better if not.
Yeah, I think it'd be interesting because Rolex, of course, never does any limited editions or that sort of thing. So I think you might see a lot of limited editions come out from the likes of AP through the year, but that's not really Rolex's style. They'll either go for go for a big bang launch, or they won't, and they'll wait till 2021. So we'll wait to see about that.
I mean, Patek might release something in September, I think, from what we hear. But let's see if that's correct.
Yeah, well, they certainly informed their authorized dealers that there wouldn't be any product this year, although they didn't go public with that. And then they did the same thing again with the retailers, and they told them that there would be launches this year, although again they didn't go public. But they did confirm that there would be watches this year. So there'll be something from them. And again, I mean, they don't really do limited editions, and they tend to do it all at once as well.
Yeah, let's see. I mean, it's a very interesting time.
Yeah. You mentioned earlier that you saw a slight rise in distressed retailers trying to move some stock. I mean, are you able to see that the likes of Rolex authorized dealers, Patek authorized dealers, these are the people that aren't in distress, and it would be the people who don't have those blockbuster brands that struggle a little more?
I think it's difficult to generalize. I think you will also have Rolex and Patek dealers that are not doing great at the moment and want to move stock. it really depends on how the retailer was performing before and what their rent levels are, what their staff levels are, etc. I think it's difficult to standardize, but of course it's easier to sell a Rolex over a phone than a small independent brand.
Yeah. And what wider changes have you seen in the secondary market over the past year or two? Because we've gone from a situation, say 5 years ago, where it's completely Wild West and a pariah part of the wider luxury watch ecosystem, to becoming much more sophisticated, much more competitive. A lot of people piled in, I think, straight after, particularly after Richemont bought Watchfinder.
Yeah.
But there don't seem to be so many new players mushrooming. It seems to be just the larger players getting larger and more sophisticated. Do you think we're seeing a maturing of the secondary market in general?
Yes and no. So I mean, we get confronted with new people trying to enter the market, I would say probably on a monthly basis. And we don't mind. I think that the more people talk about pre-owned watches, the more it becomes a real alternative or real addition to buying a new watch at an authorized retailer. The big change that we see is that brands that would have probably previously not have spoken to us, certainly not have met us, are now engaging very actively with us in very respectful dialogue and very much on an eye level. Whereas in the past, you mentioned pariah, that was certainly the case. I think the Swiss watch industry has warmed up to the idea of pre-owned. The thing that is ultimately, I guess, different to what I expected a year ago, there are a lot of people that made a lot of noise about pre-owned, also from the established players and brands. And, from what we see so far, nothing really has moved the needle in terms of getting a large market chunk. I think that there are a few people we take very seriously, and I think Watchfinder continues to do a great job, especially in the UK. But I can just say from our perspective, we are growing very fast. We did under 90% in growth last year. We hope to continue on that growth trajectory in the post-Corona world. Probably slowing down a little bit this year, but I think that we are on a very good track to become a dominant player that you would consider top two, maybe hopefully number one.
Yeah, I mean, that's actually an interesting observation, that the brands spoke a lot about the certified pre-owned market, and they looked like they were going to wrap their arms around it and come up with solutions where they owned more of a chunk of that. But the innovation and the growth seems to have been on the retail side, from the e-commerce specialists like yourself, Watchbox, Watchfinder, but also the multi-brand retailers. I mean, Tourneau in the United States has always been strong, but now Bucherer in Europe is strengthening that side of things, and Watches of Switzerland, I think, is at the start of that journey, but they are pretty punchy about it.
Yeah, I mean, we have huge respect for Bucherer. We have huge respect for Watches of Switzerland. I think also, as a public company, they're doing a great job steering through that difficult time right now. And I think these companies will come out stronger post-Corona than before. They will certainly be relevant, pre-owned players, and like you said, Tourneau has been already for almost decades in the US. I think still that you have to differentiate how you look at pre-owned. It's not like you have a product and that just sells. And I think that the pre-owned buyer that we see often very much likes the idea of buying it with a new player in a new experience, because I guess we are a little bit more millennial-like than the established players. It doesn't mean that we are necessarily, that the watch is better, but I think that the offering is different, and we attract many of these new generation buyers. And while I'm confident that Bucherer and also Watches of Switzerland will capture a very relevant share of the pre-owned, and these are great companies, I think that we will be able to probably continue really growing very fast and faster than the industry, both in new and in pre-owned, and that our operation will hopefully be considered much more sizable than theirs.
Mm. So I didn't quite catch the percentage growth figure you gave for last year and your expectations for this year, but perhaps we'll finish on perhaps you could give me those figures again and just talk about how you see the rest of this year and going into 2021. You spoke earlier about a recession. You know, the German government, the Swiss government may have done a fantastic job of providing support, but the money's got to come from somewhere and be repaid in some way. So I guess we may be looking at a fairly deep recession to follow what the health crisis is. But give me your views of last year, this year, and perhaps next year.
Sure. I mean, we grew just under 90% last year. Wow. That is, I think 86, 87%, something like that. And our plan was to do the same this year. You know, I don't want to say where we're going to come out this year because there's too much uncertainty, but, you know, growth, and even though we will be growing in the, you know, strong double digits, potentially, you know, not too far away from where we were last year. That's not really our focus this year. Our focus is really to make sure that the business has a profitable setup and continues to grow profitably from next year onwards. And then we want to go close to the 100% growth again. So that's what we aim for. We obviously need to see how the wider economic landscape and kind of mood is going to be in that context, because if everybody's miserable, we can want to grow as much as we want, but it makes it more difficult. In terms of the recession, I mean, that is just my personal opinion. I'm not a macroeconomist, so it probably doesn't mean anything what I think. But I just think that if you look at the markets today, the fact that they are almost trading at a plus again for a year-on-year basis, despite the fact that Germany contracted with 30% in exports in April, despite the fact that you have the gloomiest purchasing indexes across all economies since the Second World War, and then you just basically have 6 to 8 weeks missing in the year of productivity levels. Apologies, there's a gobble. I think that just means we will see much worse, and hopefully not too bad, but we're preparing for everything.
Okay, great, Philip. Well, it's great catching up with you. Good to see you.
Thank you very much.
You're well. Amazing to hear that the business is performing so well. So I hope the rest of the year pans out the way you hope it does.
Thank you very much.
All right,
Thank you.
Appreciate it.
Thank you. Bye bye.
Thank you. Bye.